Welcome back to the Reimagined Energy Podcast. I'm your host, Maria McGowan. Today, I'm talking with SOFIAC about how businesses can move beyond quick fixes and take a smarter path to decarbonization. We'll look at how they bridge knowledge gaps, choose the right projects, and use financing models that remove upfront costs. We'll also touch on their carbon footprint campaign and what stronger public-private collaboration could look like. Let's jump in. Hi, Stuart. Thanks for joining me today.
Hi, Maria. Well, thank you for having me as well.
So let's get down to it. And let's talk about energy efficiency and how it becomes it's a major cash investment to upgrade these buildings. And many businesses, they opt for, the cheapest or the fastest fix. So how does SOFIAC approach this differently? And tell us what your mindset is around doing it right rather than just doing it quickly.
Well, first thing is we are seeing changing times. So not all of the owners now are focused on these short-term goals. They have ESG goals, they got GHG goals, they got things that are actually demanding a little bit more longer-term focus. And they are starting now to consider full life cycle of assets. So that does offer some hope. But as we all know, often change happens one retirement at a time. The idea is, from a SOFIAC point of view, what our goals are, though, is our fund is really geared up around GHG reduction. And GHG reduction, to make something meaningful, means a longer term relationship that we have to have or engage with our clients, because we're very much predicated also around energy savings. So, and energy savings don't always go hand in hand with GHG. So we're looking at making a much bigger impact. And the way we do that, make it easier for a client, is to demonstrate the removal of a lot of the barriers that would previously be part of their consideration of that factor. So our internal rate of return versus their internal rate of return on an investment. The other one is how we impact their bottom line. So long-term savings, considering a full life cycle asset, is much better than just, hey, how much is it going to cost me and what am I going to save in the next 2 years? And then the other one, which is a big principal one and been a game changer in Canada for us, is the way we bring the money into the project. And I know I've said this before, but it's we do this so that it doesn't hit their debt service cover ratio. At this point, you'll just have to take it as read, because this is a 45-minute conversation with accountants and a great cure for insomnia for the rest of us. But it means that their opportunity cost of cash means that they don't actually have to choose between doing an energy retrograde GHG reduction, or whether they're going to buy a key piece of machinery for their property, or even buy a new property, or other competing priorities. They can actually do both.
Many companies want to take on a decarbonization project, but they feel they don't have the in-house expertise to get started. And that's a real big barrier right there. So how does SOFIAC help clients bridge that knowledge gap without especially, when dealing with ESCOs and technical audits and financial, like you just said?
Oh, yeah, interesting question, because, clients have their day-to-day business, and that does not make them experts necessarily in this field. Even though they probably have a lot of individual experts, it's very difficult to keep up with technology, very difficult to keep up with different financing type models. And what SOFIAC offers is a full turnkey approach. But what that doesn't mean is that we come in and we replace all the in-house team, or we push them to one side and say, hey, leave it to us, we got this covered. We very much work with the client. So it's done with them, not to them. We'll fit our resources around their own internal resources. We'll take care of the heavy lifting. We stand between them and the technical partner. So the ESCO, we will actually employ them. They have the expertise to develop the technical solutions for the project, but the client is right there alongside us at the same time, making those decisions. We can't come in and just say, hey, we're going to put solar on the roof. And the client says, absolutely, I don't want solar. They get to decide. We also will look at the full life cycle of anything we're going to put in, because the last thing we want to do is put something cheap in that is going to cost a lot of money to operate or maintain. And then the last one, which is really something I don't think it's unique, but it is something that we do provide and clients do sometimes take advantage of, is we can even release money through the project back to the clients early stage so that they can pay for, let's just say they need an extra project manager or an extra resource internally, or they want to bring in an external party to help them navigate and look after their own client interests. So we can release money back to them to help afford for that as well. So we remove that barrier. SOFIAC is about removing barriers to this entry in this.
When you evaluate potential clients to invest in, what criteria do you use? And then let's say, in other words, how does SOFIAC decide which projects to back and why?
So this is a complicated answer, but one thing I will say, SOFIAC, I wouldn't be working here if I didn't believe it, but SOFIAC is a really good solution, but it's not the silver bullet for every single client. So when we're in there, we talk value for money for the client. We're not going to foist a model onto them if we think there is another model on the market that would be better suited. So we're happy to do that. But how do we decide? So for us, we are looking at the potential for energy savings, because the energy savings at the end of the day are going to generate how much capital investment we can put up front. But really, we're trying to balance that out, and it is a balance with GHG reduction. We have a criteria laid upon us that our portfolio has to be above 50% GHG. But that means if I do a project in Alberta that's 30% GHG, I've got to find another one somewhere else that's 70. So, but that's our risk. So we are really trying to get the high potential for GHG reduction. Ideally, minimum of 25% of one or the other, preferably both. Another criteria is senior leadership buy-in. So very, very early on, we want to make sure that we're engaging with the right people, the right stakeholders within the client, because this is a multi-stakeholder buy-in to a project, which is, as we just said in the previous question, can be quite complicated. So we need CFOs, we need people that look after their programs, we need the people that look after the facilities to all be bought in. So we're not here to do free studies. We do the studies for free, but we don't want to stop at that. We want to get to a project. And then the last criteria is we want to invest a minimum of 3 million gross. And really there's no massive upper barrier, there is, but we haven't reached it yet. But 3 million gross, so gross meaning of any grant money or anything like that. So that could be one building, or it could be lots of little buildings that add up to over 3 million investment. If we're below that, it's probably not great value for money for the client, but we'll sit there and we'll work that out with them to make sure. They're the key criteria.
Yeah. Recently, I saw your new carbon footprint video campaign on YouTube, and it's the one that redraws the size of cities like Toronto and even Moncton, to illustrate building emissions. It's really cool. I liked it. So tell us the story about what's the story behind that campaign and what prompted it?
Well, I'm glad you liked it, actually, because I was going to ask, I was going to say, what did you think of it? Because obviously, the whole idea was actually to raise awareness. Because I mean, personally, I was amazed at some of the extent. I mean, Toronto was 126 times 126 the area of Toronto. Vancouver was times 400.
Wow.
And Moncton was only times 14. Obviously, still room for improvement, but
yes.
But the idea was to everybody, well, not everybody. A lot of people get focused on cars and emissions and electric cars and everything, but we don't always realize just how big the problem is with our existing buildings. Simple as that.
It's like embodied carbon, would you say? A lot of that.
It's not really it's not really embodied carbon. It's a lot of it is just, I mean, obviously there's an element of embodied carbon, but it's more just literally just what we're pumping straight out into the air through inefficiencies. And we have a lot of natural gas boilers, that sort of thing. People are switching to heat pumps and similar technology. But there's so much more we can do. And the idea of that campaign was, instead of quoting carbon tons, which to most of us, I mean, I'm a finance person, not a technical person, means nothing. But if you do this carbon footprint, and then I know Florent, our marketing director, they went round and they put the signs up, and I know they got into a bit of a trouble on doing it outside the Capitol building in Ottawa, but it was to raise awareness, get people to consider, how do we remove those barriers? And just it's sensationalism. I as I say, when it was presented to me, I was really shocked. I was actually quite surprised. But obviously the end part of that is, and come to SOFIAC, we can be part of the solution. We can reduce your carbon footprint. We can reduce the impact that the footprint of Toronto, because I happen to live in Toronto, has on the overall environment, and do it in a way that respects the bottom line of the clients. But raise awareness. That's the key point of that.
And education is part of the video as well, because it visualizes the carbon, the emissions. And sometimes you just have to see it. You can't see carbon, but you can see it on a map when it's like that. So kudos to you guys for putting that together. All right.
I've seen ones where they do, they'll show and they'll show a whole load of cars, taking the cars off the road. So even then we're immediately pegging it back to car emissions. So we're confusing the message. This one, I think, is very, very clear. This is the impact of all of our buildings collectively. And look at the footprint. You think you're in the countryside? Forget it.
Right. Exactly. So with deep retrofits, they often require a collaboration between public sector bodies and private companies, right? So from your vantage point at SOFIAC, what are some strong ideas for how the public and the private sectors can work together on deep retrofit programs?
Well, this one could be a podcast all of its own. So obviously see a huge potential for collaboration, and we have track record for collaboration. We've done PPPs here in Canada, a lot of PPPs, and they suffered a little bit, but now we're starting to see a little bit of resurgence in those. But the opportunity for the efficiencies across the public sector portfolios, they're huge. And really, the public sector should be leading the way on this. We're pushing, we had carbon tax, and sort of it still exists in different guises, sort of, but not really. We don't have quite the stick at the moment, but so we were hitting the private sector with the stick, but we weren't really doing it for our own public sector buildings. It's getting there, it's slow. And the biggest barriers to that are probably slow to embrace new ideas. But we know there are competing revenue sources. There is a limited tax base of which you can tolerate. They have no real means of raising capital. So they're not allowed to incur debt. If you're a hospital or a secondary school or a post-secondary school even, you're not allowed to actually go out and raise debt. So we're having this ever widening gap between sort of deferred maintenance, asset replacement, the end of life, and how much money is out there. So it's not working. It hasn't worked for a long time. So we need something new. We've heard from politicians also that they're saying, open their arms. We need to work together. We have ministries dedicated to that and removing the red tape. But when it actually translates down to sort of the bureaucracy, as it were, the middle management to try and implement these, it's met with a reluctance to change. But the risk to do nothing or continue the same, it's not assessed in the same way that we would put a lens on a new idea. So SOFIAC comes along, new idea, and they go, oh, what about this risk? What about that risk? But actually, if you apply that same lens to the way we are doing some of these, it's just we've been doing them for so long, they would never make the pass in the first place. And suddenly you would actually go, oh, actually, this makes way more sense. So we need some more reassurance from the center, I think, some leadership from the center. We're clearly working on that with different provinces. But we also have, in our own way, we've got Eco Energy 360, which is an initiative that's been started with us, with FQM in Quebec. And we haven't got to it yet, but I'm sure we'll come to it in a minute. But we've taken the first $300 million of the new fund that's going to start. And that has been dedicated just to the municipalities in Quebec. So when they're looking at this, here is now $300 million to get this ball rolling. So we've addressed the main concerns. When we've looked at the SOFIAC model, we've specifically tried to remove the barriers. So no impact to debt service cover ratio, low risk, asset ownership. All these are very, very key to public sector. So we've taken all those off the table, addressed them. There's no real reason to say no. Now it's just making sure people are aware that they have this possibility.
You have a model, I believe it's on your website. It's for how a company can evaluate whether they're a good fit or not. And it's called Zero Capex, where they can check
CapEx, yep.
Capex for positive cash flow. And, tell us how that model works in practice.
Right. Well, I mean, the very first one is if you're unsure, but you know you want to do something and you have a need, just chat with us. Chat with us costs nothing. And we can help initially sort of find the ideas. We'll build out a business case. We do it at our risk, our cost. So, and no commitment from the client to move forward if they don't want to. So that gives us an idea. It's actually a qualification to make sure they can fit into the program as well. But that will give the client the idea of what the art of the possible in terms of a technical solution could look like. And we marry that up with the investment and how the return on investment works, how much money goes back into their own pocket. So avoidance of maintenance. But ours is particularly is a shared savings type model. So we're actually impacting their balance sheet from day one, as soon as the asset's up and operational. But once they're okay with that business case and they bought into the concept, they like it, we will then go and engage a technical partner, typically called an ESCO, but there's multiple out there. But we'll engage the technical partner and we will employ them direct, pay them direct to do the full investment grade audit. And that's not a small amount of money. I mean, some of these are over $1 million. It costs us for them, especially when you've got big campuses, airports, large portfolios. That costs us a lot of money. That's money the client doesn't have to put out. So we will employ them to go and find on an outcome basis, what the technical solutions that will fit within there. And the client gets to make those decisions as we go through that design stage. Then when the client's happy with it, we'll pay for all of the installation. We'll do all the on-site management, working with the programs, working with the stakeholders, the marketing, the communication. We do all of that. And then when we've finished and it's up and running, we hand over 100% ownership straight off. So no lien, no lease, no holdover title. We will then take a portion of the shared savings, but it's not us that determine, and it's not the technical partner. It's actually an independent third party. Client picks it, we pay for it, and they will determine if there are any savings. So the worst case scenario for us is we paid for it all, client owns it all, and if there are no savings, they pay us nothing. But we will take only a portion of it. Typically, it's 85-15. That was when we had carbon tax. Nowadays, to make the numbers work, it's typically 90-10. But if a client really wants big upfront investment, they'll go to 100% return, as in 100% of the shared savings go back to us, and they don't actually want the operational savings on the utility bill. They'll take the operational savings on the avoided maintenance and avoided CapEx. The last one, when we get to the end of the term, and if it hasn't paid out, say it's a 10 or a 15-year term, and the investment that we made hasn't paid out, client just walks away, that's our problem. Hopefully, I'll be retired before then, before anybody actually finds out it went wrong. But yeah, it becomes our problem. So it's risk-free in that. And then if we overperform, there's actually an overperformance bonus, which goes straight back. We share that with the client. So
wonderful. What's next for SOFIAC? Like, what are your priorities for the next 12 to 24 months? Especially around how you see your work evolving in decarbonizing building.
Well, actually, this is perfect timing because we're just entering a really exciting phase. We were incubated in Quebec in 2021. We launched rest of Canada in 2022. In that time, we will have deployed by this Christmas roughly in excess of $200 million. Our initial fund, well, earmarked was 500, but our initial fund was about 300 million. We're going to draw a line under that. And as of first quarter 2026, because of the success, we are now going to launch into, and I'm going to get shot for saying this, but $1 billion fund. But I was supposed to say it's substantially more than what we're doing, but it's $1 billion fund is what's going to launch in January. Now, some of the same backers are in there because they see the benefits. They really see the benefits of investing in sort of green technology type like this. Canada Infrastructure Bank, and I cannot stress the importance and the impact that they've made in the fund to open the doors, put some credibility. It's not just private sector making a load of money. Not that we make a load of money, but when we launched this new fund, and we've been refining this now, is we're able to go through the lessons learned. So we've refined our internal processes. The contract has shrunk. We've made it a little bit more succinct and removed some of the things that were, a little bit less clarity. But we've really listened to the client's needs as well. So we have a much more flexible approach to the new fund. We're obviously expanding the team. One of the things I have to acknowledge as well as part of this is really helping us has been the ENACAN DRE program, so Deep Retrofit Accelerator Initiative program. With their support, which is ending in April 2077, they have really helped us accelerate this, which is, I guess that's the purpose of the fund. So as pretty much the only delivery vehicle under that program, it's really helped us to accelerate. And now with this new fund coming on board, we really want to go, you've mentioned the public sector, we really want to do more in the public sector. $1 billion could be just like 3 or 4 public sector entities, and suddenly it's gone. So if we get to that spend, we're going to be looking to launch the next fund and the next fund and the next.
Wow. Well, kudos to you and SOFIAC for all that you're doing. And I really appreciate your time and spending it with me today, Stuart. Thanks.
Maria, it's been a delight. Thank you so much for sorting out all the audio as well, and really intelligent, inspired questions. It's been great to talk about SOFIAC, and thank you very much.
SOFIAC showed how the right expertise, financing, and strategy can make deep retrofits achievable for more organizations. If you want more conversations like this, visit reimaginedenergy.com. I'm your host, Maria McGowan. Thanks so much for listening.